Pippin is the high flyer of the month. The price has almost 10x'd. The question is, how much longer can this rally last? Who's buying here? Who's selling here? Let's have a look at the on-chain data, the data most people are not considering. It's interesting how this rally is happening outside of most retail interest. Have a look at this video on Pippin published 336 days ago. It underperformed the average video on this channel. The average video is this area here in gray. Another video followed, again an underperformer, and here's the most recent one, published 9 days ago. Still an underperformer. And this is all happening while Pippin is now the second largest Pump.Fun ecosystem token. So Pump.Fun is the launch pad of meme coins on Solana. Number 1 is Fartcoin, number 2 is Pippin. And there's a good chance that Pippin reaches number 1. We just need another 15% price increase. When we look at all trending tokens on the entire Solana chain, Pippin is already at number 3. Number 1 is of course Trump, number 2 is Fartcoin, number 3 is Pippin. Now, I'm a fan of looking at relative valuations, not just at US dollar prices. First of all, we've got opportunity costs, so we want to outperform Bitcoin, Ethereum, and Solana. But secondly, there is a lot of correlation within crypto, right? When Bitcoin goes up, when Solana goes up, then many altcoins go up as well. So when we look at relative valuations, we can actually see how much better or worse is an altcoin doing, relatively speaking. Does it make sense to take this idiosyncratic risk to buy into a particular altcoin? And so what we see over here, that's the Pippin price relative to the altcoin market cap. It's called others. So that's the market cap of all the cryptocurrencies that are not in the top 10. We see a lot of volatility. Price increases of almost 5,000% with subsequent declines of 95%. By the way, if you so far enjoy this content and you don't want to miss future videos, then feel free to subscribe. I publish videos regularly over here. And interestingly enough, since the 10th of October, which was the flash crash in all of crypto, and Pippin crashed as well, since that deleveraging event, we see nothing but outperformance. Now this crash here, this already gives us a first hint on what might drive the current development. Because the cryptocurrencies that do not have perpetual futures, the cryptocurrencies that do not have any levered bets on their prices, they did not see those kinds of declines, right? This was an 82% decline within just 1 or 2 hours. It's fascinating to see how the current rally is driven mainly by the heavyweights. So the whales, they are going up in numbers. What we see here on the left, that's the number of wallets with at least 3,000 Pippin tokens. So at the current price, that's roughly $1,000 worth of the token. This tends to go down, so retail is taking profit, retail is dumping. The same is true for medium-sized retail, so that's now at least $10,000 worth of the token. But on the right, we see the wallets with at least $100,000 worth of the token. And this is going up, especially in the last month. So the whales, they tend to make the better calls. That's why they are whales in the first place, right? They made some money in the past. Crypto is not just a game of luck, it's also a game of skill. And so the longer the game is played, the more the capital allocates towards the people that know how to identify winners early. Have a look at the trading volume over time. This is the spot market, so there was only 33 million worth of trading volume on Radium. But compare this with the perpetual futures market. Here we had 1.5 billion worth of trading volume. So very likely what's going on here is that some market makers are betting on the Pippin price with a lot of leverage, moving all of that volume, and then the price gets manipulated on the spot market. So imagine you're a casino, you offer bets on team A or team B, but at the same time you've got the power to impact who's winning. At the same time you bought the referee. That's what I think is going on with Pippin. There's a lot of bets on the price and the outcome is just dependent on a few dollars. That's way less compared to the bets. This deleveraging event on the 10th of October, it made $1.2 million worth of longs, so worth of speculators betting on rising prices, to lose their funds. But since that deleveraging, there's more and more and more liquidations because Pippin gets manipulated in the direction where retail does not want it to go. The funding rate tends to be negative, and so there are more people betting on falling prices than on rising prices. And so the price then goes up, manipulated by the market makers. We see a short squeeze. And so the open interest on Pippin is sky high. It's currently at 104 million at a market cap of only 300 million. When open interest declines, and the price of Pippin is likely going to decline as well. There is a lot of volatility in this asset. This is not something to hold over the long term. This is something to trade. This is something to buy low and sell high, and to go with the same direction as where the market makers are placing their bets. Now, very few crypto YouTubers are willing to share their own performance. I've created a copy trading vault where I traded for the community members, the premium members of this channel, and the performance is shown here at the top. So we're trying to achieve performance independent of the macro environment. We are up so far 17.6% since July of this year, while Bitcoin during the same time frame went down by more than 22%. So we might be going sideways in Bitcoin, we are making money. We are going down, we keep our money. And the way we achieve this is with relative valuation trades. So we bet on altcoins to underperform that tend to have a rising supply, where the supply goes up faster than the demand. That then leads to those altcoins just long-term underperform versus the general market. So this is now Balancer relative to Ethereum. That's the Balancer supply chart. And we can simply just turn this around. So we just bet on Balancer going down relative to Ethereum. That's how we can make money in a market that overall might still be going down, but if the thing that we short goes down even further and at a quicker rate, that's then how we profit. And so there are two ways to benefit from this. You can simply just copy trade whatever I do. I always announce every trade that I make to the premium members in a channel in real time. Or you can join the next automated copy trading vault that will open again for deposits in January of 2026. That copy trading vault will be available to all annual subscribers. So I can simply start off with the monthly membership, and if you're starting to make first money with manual trading, you can also then swap to automated trading via yearly membership. I will, by the way, share my favorite trade once you join. So that's not Balancer anymore, it's something else. I will share that trade even if you just join on the monthly membership. And if you make money with that trade, then of course that's great. If you don't make money though, then I will refund the membership to you. So there's really no risk in just trying it out. If you don't make money with that first trade, I'll just send the $125 back. A link to Premium will pop up on the screen. It should be somewhere around here. Looking forward to seeing you on Premium. And again, thanks for watching. Cheers.